Now, foreign portfolio investors have, in the last 6 months of the year, sold stocks worth 576 billion naira on the Nigerian exchange. Now, the total value of transactions on the exchange during the same period amounted to about 4.2 trillion naira, and that's up from 60.98% from 2.6 trillion recorded in the same period in 2024. However, the sale of the equities by the foreign investors in the first half of this year represents an 84.97% increase from the 311 billion naira withdrawn in the same period of 2024. Well, you have to follow me there because there's so many numbers and figures. Now, the outflows exceeded foreign inflows, which stood at 559 billion naira, resulting in a net negative foreign portfolio position of almost 17 billion naira over the 6 months. Now, according to NGX's June 2025 domestic and foreign portfolio investment report, total foreign transactions reached 1.1 trillion naira, and that's in the first half of the year 2025. Now, more than double the 540 billion naira recorded in the first half of 2024. All right, we'll be understanding these figures with our guests.
Well, for more on the foreign portfolio investors development, we are joined by Professor Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, and he's the President, Capital Market Academics of Nigeria, the perfect man to break down the figures.
Help us
Thank
understand
you so much,
the figures.
Prof, for being here.
Thank you. That's why.
I mean, from the basic that I know in all of these figures, over 500 billion naira in outflows. And we do have a negative position, a net negative position as a result of that. What's spooking the markets?
Well, I would say there is no reason to panic. Just as you said, the negative position is just 17 billion. We had inflows of 560 billion, as you just read out. The outflows, 576, point something, so about 17 billion, net outflow. So that to me isn't significant, particularly so when you also look at the entire results of the market within that 6 months period. The market gains as much as 16%. More than peer markets, so to say. And again, you should also realize that for portfolio investors, okay, that is their nature. Portfolio investments are meant to be, volatile, speculative. Most of them that invest don't do long term. If you look at the categories of investors we have in our markets today, you have the foreign investors, you have the domestic investors. Within the domestic, you have institutional investors, okay, such as pension funds, and then you have retail investors. Okay, the good news is that domestic investors, have continued to account for the bulk of the transactions. In that report, okay, you will notice that domestic investors accounted for over 70%, of the transactions. Yes, it wasn't like that. Pre-COVID. Pre-COVID, the situation was there in the sense that foreign investors dominated the market. So anytime they exited, the market tanked. The market tanked. Okay, so people panicked. But this time around, even with their exit, the market stood strong. As I said, even today as we speak, the market year-to-date return is as high as 42%. So, their impact, I would say, hasn't been significant.
Okay, so why are we having this conversation then? If there's nothing to worry about, apparently there's something. When does it get to a point where we really should be concerned? Because some experts like yourself are saying, look, this is all happening because, number one, the volatility of the naira, in spite of reforms, rising cost of doing business in Nigeria, delays in repatriation of profits. There was a time when that was an issue. I thought government had a handle of the issue of repatriation of funds. What do you make of this? I mean, you are saying clearly that there's no cause for alarm.
No cause for alarm.
But if this trend persists, when should we begin?
Okay, well,
what can we do for it not to persist?
Okay, yes. If you're looking at the equities market, what has happened in the equities market with respect to foreign transactions, and I just told you that the domestic investors dominate. And But if you want to look at it from the aggregate point of view, the total foreign investment that came into Nigeria, okay, that's when you begin to worry. Okay, so you now have to tie this with the recent report released by the National Bureau of Statistics, for example, that also talked about 5.6 billion US dollars coming in the first quarter of 2025. Okay, out of which what they call hot money, accounted about over 90% or 92%. So that is a cause for worry. Right. And what is hot money is simply, again, this fair weather, what they call fair weather friends, these short-term investors. Okay, so they come, they invest in your, short-term, securities, and at the slightest sign of trouble, they exit. Okay, so that is where the worry is. When you look at the aggregate.
520 billion out of 5.20 billion out of 5.64 billion.
Yes, that's over 90%. 520, 5.6, 5.6, just as I said, 5.6 came in. 520 was by these foreign investors. And when I say aggregate, much of it went into government securities, such as treasury bills. Okay, some of it also, went into, some fixed income like government bonds. Okay, but the equities segment, which of course is what you asked me for the equities, NGX. That's why I said, as far as that is concerned, there is no reason to panic. But in the aggregate, looking at that MBS report, of course, there's reason for concern. A situation where the real investment, so to say, which is foreign direct investment, is only accounting for 2%, 2.2%, 236 million or so. If you annualize that, that's less than $1 billion. Whereas in countries like Indonesia, Malaysia, okay, India, for example, I'm even talking about emerging markets, you have these countries report as much as $20 billion. Okay, so we have reason to worry in terms of foreign direct investments because, again, I call them fair weather friends. Yes. And that can be destabilizing, to an economy, especially when your reserves, you don't have, sufficient reserves or healthy reserves, and they are leaving. Okay, so that can destabilize you, destabilize your forex market. So I think going forward, more attention should be paid to attracting foreign direct investments as opposed to portfolio investment. Portfolio investment, of course, you may need them temporarily, but you should recognize, yes, some people might say, of course, you need them to buy time, Okay, that's understandable. Central bank was raising rates, and that was attracting them. Okay, but ultimately, what is more important? What can create jobs? What can even grow make your GDP inclusive? So when you say GDP is growing, people can feel it. It's when foreign direct investments come in, the type that creates jobs. Okay, and reduces poverty, not portfolio investments.
Perhaps it's time we start paying more attention to the domestic investors as well, who are filling this gap and, ensuring that the market stays despite these outflows. But, I wanted to piggyback on what you said. This fair weather friends, is it possible to stop Nigeria from being the playground? Because in layman's terms, it's like a playground. They come, play, and make their money, go. In the long term, what does that do to the health of the economy, the health of the market? Is it possible to stop them from doing that?
Yes. Okay. Yeah.
And then the domestic investors.
Okay. First, you have to understand the drivers of what influences investors. Well, of course, you have both global and domestic factors. Now, global factors, you're looking at those international developments that have a rub-off on the oil price, and international developments to the extent to which they also affect interest rates globally.
Like Trump policies?
Exactly, like Trump policies. Okay, a time was, I think in the month of April, for example, treasury rates in the US, went up. So we saw that capital, reversals, because anytime rates go up in the US, you see these investors, they move from here, to these economies. So that's one. Back home too, we worry about inflation. We worry about the three prices, okay, essentially: inflation, exchange rate, and interest rates. Okay, when interest rates go up, you should also expect that investment in the equities market, will decrease because the traders will rebalance their portfolios in favor of fixed income securities. But you asked a good question, and that good question is to make our business environment okay, a lot more conducive for foreign direct investments, to come in. So that speaks to a lot of factors. That speaks to infrastructure. That speaks to even security. Okay, that speaks to even the tax environment, which is also why I'm happy that in the area of tax environment, something is now being done about it. Ensuring that the tax environment is friendly. So we need to have that, as I said, conducive environment to attract foreign direct investment. Ultimately, let me repeat, what counts is foreign direct investment. What is foreign direct investment? We want people to come here and establish plants, establish. So, for example, beyond these financing arrangements we have with China, for example, in assistance, it would be nice if we can get them to come and, invest here, put their plants here. Okay. If you look at these countries I mentioned, look at their source of foreign direct investment. They come from Singapore. If you check the report by United Nations Conference on Trade and Development, that's where you see countries that are big on foreign direct investment. Singapore, China, Japan, Netherlands, and in Africa, Mauritius. These are countries we should be, trying to attract to Nigeria, as opposed to what is happening now. If you look at the sources of our investments over the years, it has been UK and the US. It's only this one you saw South Africa and Mauritius, but it has always been UK and US. And what do they bring for here? It is the hot money, the portfolio. Exactly.
Right. So now the central bank recently, came up with a rash of measures, to stabilize the naira, boost investor confidence and all of that. Some experts say yes, while these measures are good, the policies are good, they may take time to begin to materialize.
Absolutely.
So how does Nigeria compete effectively, for capital in this economy now?
Yes, we're talking about monetary policies and forex policies. I would say part of what the central bank has done, to be fair, has also helped to stabilize the forex market. Today you have relative stability in the exchange rate, and that's also on the back of the kind of reforms they have done, particularly trying to inject transparency in that market. Towards the end of last year, you saw the central bank introduce the forex code, the forex matching system. All of that, were meant to introduce transparency in the market. And you also notice that this year in particular, central bank has also from time to time intervened in that forex market. Before they said they were not going to intervene, allow market forces, but they have seen the need, to intervene from time to time. Okay, that's why you also find that, again, because of those policies, you now find the reserves, increasing. And these foreign investors are also looking at our reserves. Okay, when you have healthy reserves, it also gives them the confidence, to come and invest. But by and large, for us to have a sustainable, attract sustainable investments, which I have called foreign direct investment, the bottom line is to fix our business environment.
Before I let you go, this question as to how the FCT Abuja has attracted more.
Overtaking somebody asked me that
Lagos
question.
with all its advantages and what have you, population, everything.
I think the media has asked me that question, and I said, of course, if you check the records, capital importation reports over the years, it's been Lagos. Again, because it has been foreign portfolio investments, and Lagos is where you have the commercial capital of Nigeria. So all the financial institutions are there. But what has happened this time is that foreign investments are into three categories. You have foreign portfolio investments, you have other investments, and then you have the foreign direct investments. Now, other investments include loans, okay? And you know that the federal government has been, issuing bonds and so on, borrowing. And investors too have been taking up some of these positions. So the fact that you have the central bank headquartered here, you have the debt management office headquartered here, okay, may have also accounted for that, because they are the ones that have issued these securities, and the securities issues must have been recorded or accounted for in Abuja.
Okay.
That's why you have FCT overtaking
Lagos
for the very first time. Yes.
All right, Professor Uche Uwaleke is the Director, Institute of Capital Market Studies, Nasarawa State University. He's also President, Capital Market Academics of Nigeria. Thank you very much for helping us understand these figures.
Thank you.